Okay, so it's 8 o'clock on Friday, July the 30th. I'm going to lead off by making a comment. Remember that First Option Bank in particular, and me specifically, we're not making suggestions to buy or sell any securities. We're not soliciting to make those moves. However, but because it's earnings weeks, there are some things I want to talk about. First off, we're going to talk about Apple, which announced a split last night. They're going to go 4-for-1. That actually is a kind of a non-event. If you've got 10,000 invested, you'll still have 10,000 invested, but instead of having 100 shares, you're going to, instead of having your shares are going to split 4-for-1. So it looks great on paper, but look on the far right-hand side and your investment's the same. What it really means for Apple is probably what they're hoping to do is to attract more investors. Their current price of about $400 a share is a little steep for some people, and so it may attract some more investors. The other thing to remember this week as we've had earnings season, there's been some surprises, some not surprises. I think one of the things that surprised me was the surprise about Starbucks. Starbucks beat the estimates on the street, and people seem to be surprised about that. Well, if you've ever driven by Starbucks, I don't know why that's a surprise. You'll see 2 cars in the parking lot and 20 cars in line waiting for their coffee. So the COVID lockdown really didn't mean that much to Starbucks, other than maybe selling a few more sandwiches out the front door, but they still had those lines. They were still able to serve those people. They were closed for a couple of days, but they got back open after they adjusted. So their surprise to me was really a non-surprise. It's interesting to see how long people will wait for a cup of coffee in their car. And so they've kind of adapted. So along those lines, I wanted to talk about companies that adapt, and that's kind of what we look like, what we look for in times like this. And has all the adaptation happened that's going to happen? You got to remember that pulp mill started in Finland back in the 1800s. That pulp mill eventually started making rubber and cable, and then they started making tires, and then they became the largest manufacturer of cell phones in the world. That was Nokia. And then you had a guy come over from France. He borrowed some money, and he started a gunpowder mill in Delaware. And that gunpowder mill at one time was providing about 35% of all gunpowder to U.S. military forces during the Civil War, both sides. And he started buying some small chemical companies, and Mr. DuPont's company became the largest chemical company in the world. So companies adapt and change, and we'll see some of that as we go through this COVID, as we go through some other things. But one thing's already cropped up where people say, well, all innovation has happened and any change has been made. Well, that's not really true. We had digital film come into play in the early 2000s. I was one of the last people to give up my film. I love my 35mm camera. I stocked up on 35mm film. Kodak ended up filing bankruptcy in 2012. Their stock was trading at about $25 a share. We found out this week that Kodak is entering the generic medicinal packaging business, and their stock went from $4 a share in January to $25 a share this week. Phenomenal response, but the interesting part is they were able to take that business that was essentially dead and turn it into something that's going to be possibly very viable. Now, that doesn't mean we're going to go run out and buy it this week, but it means that we're definitely going to take a look and see how they do, what are their plans. But for Kodak, which was essentially dead, to come back and be a viable industry again, re-identifying themselves is pretty impressive. And those are the kind of things we like to see. And me being an aviation nut, I always look back on the Wright brothers who built bicycles and flew an airplane. So those are some things we're looking at. Innovation. The other thing that we saw this week was the FOMC met, and anybody knows the Federal Open Market Committee, they kind of do what they can to keep the economy running, to keep employment up. And there are some times where their job is relatively simple, and there are times like now where they're a whole lot like a clown at the circus trying to keep plates spinning on sticks. And that's kind of the position they're in. But their statement was that the path of the economy will depend significantly on the course of the COVID virus. So their statement this week, which they put out Wednesday night, is important in that they're identifying that, number one, they're going to continue to do all they can to help with unemployment. They're going to continue all they can to shore up the market. But the other part is they're forecasting that we're really not going to see any significant change or any significant growth, or we're not going to see a whole lot of movement one way or the other for probably through 2021. That's not a surprise. We've said that a week ago. We said it 2 weeks ago. That growth is stagnant. So the FOMC is on at their next meeting, September the 15th. That meeting is going to be important because at that meeting, they're going to talk about their summary of economic projections. So this past meeting was important in that they were reaffirming what their job is. They were affirming monetary policy, those things we wanted to hear. But the next one is very important because they're going to be working on a summary on what they think is going to happen over the next 6, 12, 18, 24 months. Some of the projections I've heard this week is that it will take us probably until early 2022 till COVID's out of our system, until it's no longer an issue. And that's, looking at 18 to 24 months from the time it hit. So that's entirely possible, and we all need to be pretty much prepared for that. The news report came out yesterday that was a little bit disturbing, but I'm more disturbed about how it's being reported by the media. I heard it twice coming into work this morning that the economy declined 36%. Well, or 32.9%. They keep missing the really important word that was in there. That's called annualized. So yes, it's true that if you took the results over the last couple of months and you do those over and over again for 12 months, you're going to have a negative 32.9% effect. However, that's probably not going to happen. It would be very unusual for us to work our way into a hole like this and then not be able to get out of it somehow. So remember that when they're throwing around this 32.9% number, that is an annualized number. That is taking what the recent report is and multiplying it out times 12 and saying, hey, if we keep this up, this is where we're going to be. And that certainly isn't great. But our thing is, let's keep perspective. Let's, again, look at the whole forest. Let's step back and look at it all and see where we are. So remember, when you hear those numbers, I've heard it today, keep yourself adjusted to, those are annualized, and that's not a one-time thing. So Mallory, if we could go to our COVID chart, please, and I'll show you a couple things that we're looking at right now. Over here on the far right-hand side, you can see that we did have a little bit of a dip. Remember I talked about we've kind of flattened out. We have our 7-day moving average, our 14-day moving average is in silver, our 7-day is in orange, and our daily is in blue. You can see how they flattened out, and as I've said before, that's good news. But what you'll notice is there's a bit of a dip. Yesterday wasn't great. Generally this week hasn't been great. Again, I don't want to have on rose-colored glasses, but I do want to point out that it's earnings week, and that's not unexpected. You're going to see a lot of reaction to the market. We're going to see some surprises up, some surprises down. So we want to pay attention. Now, what's going to happen today is kind of important. Right now, the futures are showing up about 40 or 50 points on the Dow Jones. We're showing triple digits on Nasdaq. That's technology. That's not bad news. But it is at a point where we're paying attention to what we've talked about before. Could we be heading back down? As the FOMC said on Wednesday, how COVID goes, so will the market. Having said that, we also know that generally what the Dow is doing is more reflective of, it's kind of looking at the future. Things are built into it. So we need to pay attention to what that's doing and where we're going. And then, so we have that coming up. Then we have the next big thing for us. We have earnings season runs through about August the 15th or 16th, somewhere in there. And then we have school openings, and that's going to be oddly a pretty big key. What happens with schools, where things go? Can we keep all this under control? Does it come back? Does COVID come back with a vengeance, and what happens there? So while schools aren't directly related to the market, it is going to have an impact. It is going to have an impact on consumers and things that we're doing. Now, we still see some areas that were solid, consumer durable staples, things that we all have to have every day. Oil and gas, that's kind of interesting. The price is way down. We're not traveling as much, and that's just kind of the nature of the beast. We're adapting, and I think our concern is that have we adapted so much that we're kind of forgetting about what's going on, and we really can't do that. So the bottom line is our economy is going to run on consumer spending. If we're spending money, then the economy is going to go up. We have another bill out to get everybody some more money. Whether that's the right thing to do or not is a political issue. It's debatable. It depends on what they do. What we do know is in the last 6 months, generally in the last 3 months in particular, consumer savings has gone up. So people are starting to save more money. They're not necessarily spending it. They're saving it. So they're not spending it at restaurants. They're not spending it on vacation, not doing those things yet. I like the idea that we're talking about possibly giving a tax credit to take a vacation. That would be that would get some money flowing, and that's a positive move. But basically, where we are right now, consumer spending is going to drive where we go going forward. So we're sitting back and evaluating all of our earnings reports. Again, there's some surprises up and down. Nothing that's really shocked us. Some of the small ones are just kind of a nature of the beast and what's going to happen. What happens at the FOMC meeting is important on September the 15th. And then we're in a period where between now and if we do what some of the experts are saying, and we see some growth in the last part of the year, that growth is going to come almost wholly in the last quarter. We get school back in place, things go well. The people that are working from home, a lot of those people are going to keep working from home, and that's going to help the bottom line of companies. There's a silver lining in all that. So there are some good things happening. There are some bad things happening. The difference during this time period is we're kind of like the clowns spinning plates. We've got a lot going on, and we have to pay attention to a lot of things. So we'll continue to move forward, analyze as best as we can. We're always here. If you have questions, give us a call. Mallory, do me a favor. Let's take a look at the world market real quick. That's the next slide. And the only thing here that's a little different over on the right-hand side, you see the colored bars, red and green. That tells you the movement since last week. So you're seeing some decline there. Again, the U.S. has, we've always had the Nasdaq has been leading. We're up 18% for the year. But here you have the world market, and they're going down again. So we'll see how that goes out in the next couple of days, see how it shakes down. But you've got the UK down 20%. That's not great. You've got Singapore down 21. That's generally all of Asia. And then Japan is actually only down 5.6. Not bad, but here we are in the US. We've got Nasdaq, again, high technology. We've got the Dow Jones, that's 30 big stocks, down 7.8. All in all, considering where we were in 2009, we were at 6,800 on the Dow. We're now at 26,000. That actually is an incredible roll. So being down 7.8% in 2020 is not something to be alarmed about. Our average is still a significant number. And then the S&P 500, which is actually a lot of what we base what we do, because it is 500 companies. It's a nice broad cut of the corporations that are out there, essentially flat for the year. So these are not bad numbers in the United States. Our concern is, as the world goes, more so goes the rest of us. And then Mallory, that next slide, and this shows us. This is unemployment, and over on the far right-hand side, you can barely see it, but we saw an uptick yesterday. A little bit of concern, that's actually 2 weeks in a row where we saw a small increase, but look at that orange line, which is moving average. It's still flattened out. It's staying relatively flat, so the next issue is going to be what happens. Today, the stimulus runs out, so those $600 weekly checks are going to go away. Congress was not able to, unless they can pull off a miracle today, but most of them were out of the office yesterday. If they pull a miracle off and extend that today, that would be interesting. I don't think they're going to be able to do it. So I was talking to some people last night. I was talking to my daughter, my son last night, and they know of someone who's working full-time from home, and his take-home pay is $640 a week. If he wouldn't work, he'd make $600 a week. It's almost laughable, the difference. So it'll be interesting to see what happens if that $600 runs out after today, and see what happens to that unemployment number. And we'll be watching that in a week. So that's where we are. We will not be here next week. We'll be taking the day off, and then 2 weeks from today, we'll be back. If you have any questions, send them to me, mmccauley@firstoptionbank.com, or send them to Mallory, MVAUGHN@firstoptionbank.com. We'll be happy to get those into our broadcast 2 weeks from today. Stay safe, wear your mask, and take care of yourselves. Thanks for joining us. Have a wonderful week.